So you want to move to Southwest Florida, but you don't know if right now is the time. Well, this video is for you. In this video, we'll cover historical data that will help you make the right decision. As several of my mentors say, history leaves clues. More after this. Hi, if you're new here, welcome. Thanks for visiting our channel. If you want to learn all there is to know about living, eating, biking, boating, beaching, scuba diving, fishing, buying a home, selling a home, you've come to the right place. Just hit that subscribe button below and hit that bell button on the side. And what happens is you'll be notified whenever we put out new content about living here in Southwest Florida. My name is Doug Lugers. I'm a real estate broker here. My wife and I run this channel, and we've helped many people just like you from all around the world move to Southwest Florida so they can also experience what it's like living here. In today's video, we're going to be talking about the market and specifically whether now is a good time to make a move for both buyers and sellers. Just a small disclaimer, and that is I don't have a crystal ball and no one does. If you're listening to someone who thinks they got it all figured out, you're probably listening to the wrong source of information. But I have good news, and that is history and data leaves clues. So we're going to share with you high-level data on a national level and predictions on a national level, as well as the predictions and the data for here in Southwest Florida. And to start off, I think we need to talk about what the definition of a recession is. And the reason why is we're going to talk about or use the word recession several times throughout this video. The most widely accepted definition of a recession is 2 consecutive quarters of negative GDP, meaning the economy is not growing for 2 consecutive quarters. Now, one indicator that has to do with recession is interest rates. You can watch interest rates and kind of gauge where we are in the recession period. And that's because typically interest rates go up in the beginning of a recession. And in order to come out of a recession, you're going to start to see interest rates be lowered. That's because interest rates going up is a tool that the Fed uses to slow down inflation, slow down the rising prices of everything. And then the reverse of that is when we're in a recession and the market or the economy has slowed down enough or slowing down too much, they start to lower interest rates to encourage people to start buying, encourage the economy to start moving, and stimulate the economy. So let's look at this first line graph. Basically what it shows is back to 1971, you can see that interest rates were higher going into recession and lower coming out of recession. It also shows that based on history, recessions are somewhat predictable because they leave us clues, which takes me to our next table here. This kind of cleans up the last line graph that I showed you. It puts it in cleaner format to read. And what it shows you is that recessions are short-lived. And that each instance, interest rates fell coming out of a recession. In fact, you can see that the longest duration of a recession that we've had since 1980 has been a year and 6 months. And in each instance, the interest rates or the mortgage rates fell coming out of the recession. Again, because the Fed is stimulating the economy at the end of a recession, trying to get it bumped back up. So if you watch mortgage interest rates, this will give you an indication of what the Fed feels like, how the economy is doing in terms of strength. And the other thing is the Fed knows that the real estate market has a tremendous impact on the economy. That's what I'm trying to say. And that housing will lead us out, which takes me to this next point. A recession doesn't equal a housing crisis. That's a myth that we hear a lot in this industry. And most of buyers and sellers think that because we're in a recession, that housing prices are going to tumble and there's going to be smoking hot deals out there. And sometimes there are, but that's the automatic thinking of a lot of people. Don't be that person. And here's why. If you look at the last 6 recessions back to the 1980s, you can see that 4 out of the 6 recessions, home prices still grew. And only 2 of those instances did the prices actually drop. And we could talk about the reasons why the home prices dropped in those 2, but that would be another video, because the data that I'm about to show you is going to indicate that where we'll end up, at least what I believe. It's pretty strong data. So again, I don't have a crystal ball, and I do predict that home prices will continue to slow, but I think we're going to end up right around that pre-pandemic level. I think home prices and everything is going to adjust to what we were in a normal market before the pandemic. So what we experienced the last 2 years has been crazy, and anybody that's sane believes that we can't continue on that pace that we were the past 2 years. In fact, in the words of Lawrence Yun, the chief economist of the National Association of Realtors, it's been gangbuster the last 2 years. So why do I believe we're going to go back to a normal market here in Southwest Florida? Well, because three main reasons. One, the numbers that I just showed you, that a recession is short-lived. Number two, we've been underbuilding homes. There hasn't been enough new construction homes nationally for 14 years. In fact, experts say that shortfall ranges anywhere from 1.3 million to 2 million homes that needed to be built the last 14 years that haven't been built. That's insane, 2 million homes. And then the third point is the largest buyer pool is the millennials. They are larger than a baby boomer population who's still buying, obviously. And millennials are moving through their peak home buying years. Millennials are of age to buy, and they need housing. So this is going to continue to fuel demand. Now let's talk about a market update. So what's actually happening right now? What are the numbers? There's 5 main indicators that we use. The first one is offers received per listing. So how many offers get received by each listing on the market? Well, that's been declining. It was 5.5 offers per listing in April, right? A super hot market. So what did it decline to? 4.2 offers in June. It did slide a little bit, but can you imagine you're a listing right now, you put your home on the market and you still get 4 offers on average on your home? Think about that. That's still an indicator of a hot market. Next indicator that we look at is offers over asking price. How many of those offers that each listing get, how many of those are over asking price? That's been declining as well. A month ago, it was 61% of offers were over asking price. That's since softened to 55%. That's still more than half of the offers that are received are over asking price. Not a huge decline, and still an indicator that the market is still pretty hot. The next indicator that we're going to look at is closed sales. I think that's where the rubber meets the road. So if we look at the pre-pandemic single-family sales for June of 2019, if you look at June of 2019, there were 1,807 single-family sales in Southwest Florida. And if you compare that to June of 2022, there were 2,017 closed single-family sales, which represents 200 more home sales, June versus June. So again, more home sales, but I think we're slowing down a little bit. We're moving toward that normalized market. Now let's talk about months of inventory, another huge indicator and another number to follow. What is months of inventory? What it is it tells us it gauges what buyer demand actually is as of right now. And how they do that is they figure out if no other homes were listed on the market for sale, no new homes were listed on the market for sale, how long would it take to sell the current number of homes on the market? And in a balanced market, there's 6 months of inventory. That means that the market's not working in favor of buyers or sellers. There's 6 months of inventory. Well, pre-pandemic, the months of inventory, June of 2019 was 6.8 months of inventory. So it was a pretty balanced market. If you compare that to June of 2022, we're at 2.3 months of inventory, or maybe just a little bit over that right now since it's July. But that's still another indicator of a pretty hot market. Now, the last indicator that I will talk about is the percentage of list price. How much can a seller expect to get at the closing table of their asking price? What percentage of their asking price do they actually walk away with? Pre-pandemic, June 2019, that was 96.6%. And if you compare that to June of 2022, 99.5%. So some people are still getting an over asking price. Some people are getting less, but the average is 99.5% right now, which is still pretty hot. The normal that we seen in June of 19 was 96.6%. We're still pretty lucky here in Southwest Florida, which takes me to the next point. the existing home sales. How many homes are going to sell throughout this year? The NAR, the National Association of Realtors, predicts that the number of home sales will end up at 5.4 million homes nationally, which is more than the 5.3 million that sold in each of 2018 and 2019. Again, another indicator that we're moving toward a more balanced market. In summary, here's what I think after all this that I just showed you. Number one, we're heading toward a more normalized market. So we're still going to experience a slowdown as we go through this next year. And that is a good thing. Number two, buyers are going to have more options as we go. So if you're a buyer, you're going to get more options as we move along. That's a good thing. Number three, home prices will still continue to rise, although not at a fast pace like we've seen these past 2 years. Again, that's a good thing. So I think this all means that if you're a buyer and you plan on living in a home for at least 3 to 5 years, you're still in a good situation to buy now. Waiting will probably cost you more money as home prices will continue to rise. So remember, 60% of buyers in our market are cash. So we're not as affected by interest rates as other markets. And if you're a seller, now's still a great time to sell. Although your pricing needs to be more dialed in, you need to be more accurate, you're still going to make a killing if you cash in your equity now. I hope you enjoyed this video, and I hope you can make a more educated decision as to whether now is the right time for you to make a move or not. And when you're ready, we will be ready to help you make that move. And if you want to stay up to date on what's happening in our market, or you want to just learn more about living here in Southwest Florida, don't forget to hit that subscribe button below and that bell button on the side so you can stay up to date on what's happening. I'm Doug Lugers. Thanks for watching.